Thank you for joining me. I'm Alex and I want to talk about Wayfair. So what they do is online retail of furniture and accessories and stuff like that. Current price is $333, which gives them a market cap of $31.8 billion. Dividend is 0. I don't expect that to change pretty much ever. At pretty much any time frame that I actually care about. Revenue currently $9.1 billion, which is up 25-ish%. Earnings almost negative $1 billion, which, is kind of a problem. They currently have a PE of negative 50. Forward PE is unlisted. Current earnings are like 1/30th pretty much of the market cap. So currently the PE is negative 30-ish. I don't know why Yahoo Finance does this, but the PE is listed, I assume, from the last earnings or something. Regardless. Total assets $3 billion. Total liability is $4 billion, which gives them a total stockholders' equity of negative $944 million. So it's obvious that there's some problems there. I really don't like negative stockholders' equity because things can go downhill fast from there. So in case you're wondering, you don't need to file for bankruptcy as long as you have the cash flow to sustain everything, basically. So you can make it a long time even with a negative stockholders' equity. The problem is that as soon as the cash flow gets turned around, where instead of having float, you need to pay more bills than you have money for, then bankruptcy filing will follow shortly after. So overall, obviously for a dividend investor, there's absolutely nothing here. For a growth investor, I think the revenue growth is actually significant enough. The problem is that you still have to worry about the company going broke, and now is not really the best time for companies with a negative balance sheet. So you kind of have to wonder if the risk is worth it at this point. Now, obviously, a company with a market cap of $31 billion is fairly big, so you would think that they would be able to raise money somewhere. But I really don't have the risk tolerance for this, and I'm not sure if the revenue growth is actually enough to make up for that risk at this point. So obviously for a value investor, a negative balance sheet is pretty much a no-go at any point. No earnings is a huge red flag, and what's left really, So I would say that for me anyway, the risk is just not worth it at this point. The growth is there, but I think that even with this growth, you can find companies with a better balance sheet that are not on the brink of collapse. So overall, I would say don't buy this stock at this point. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.